Welcome to the Deep Dive. Today we're tackling something pretty significant. The global market for Syngas derivatives.
Yeah, it's a big one.
We've got this comprehensive 2025 market report we're digging into. And, well, the mission is basically to pull out the key insights. Current size, where it's heading, regional stuff, what's driving it all.
Exactly. Think of it as getting you up to speed quickly but thoroughly on Syngas derivatives. We're wading through a lot of data here
Lots of data.
to really boil it down for you. The report's packed, so we'll focus on the most telling figures and trends.
Okay, and just to give everyone a sense of scale straight off the bat, here's a number that jumped out. The report projects the global Syngas derivatives market to hit, get this, USD 221,524.5 million in 2025.
Wow. Yeah, that's huge.
Right. Tells you immediately we're dealing with a major global industry here.
It really does. Highlights the current scale, the relevance. But, what's really interesting is the trajectory, where it's going.
Okay, let's get into that growth then, because the report suggests it's definitely not standing still. By 2033, it's expected to reach USD 467,994.2 million.
That's more than double.
In just 8 years.
Yeah.
What does a jump like that signal?
Well, that leap is fueled by a pretty strong compound annual growth rate, the CAGR. That's the average growth per year of 9.80% between 2025 and 2033. That kind of consistent upward trend, it suggests, significant sustained expansion pretty much everywhere.
Okay, so serious momentum. Let's break it down then. Where is all this happening? How does it look geographically?
Geographically, North America is currently the biggest player, holds the largest share, actually over 40% of the global revenue.
Over 40%, okay.
For 2025, the market's estimated at USD 64,242.11 million, and the growth, projected CAGR of 8.3% through 2033.
So a solid lead. Makes me wonder if others will catch up, though.
It does, and what's driving it there specifically?
Good question. What's behind that North American dominance?
Well, within North America, the U.S. is definitely the main force. About USD 50,687.02 million in 2025, growing at 8.1% CAGR.
Okay.
Canada is significant too, around USD 7.7 billion, but with a slightly higher growth rate, 9.1% CAGR. And Mexico follows with about USD 5.8 billion, 8.8% CAGR.
Interesting variations even within the region.
Right. And the report specifically calls out supportive government policies, both U.S. and Canada. Think like incentives for cleaner energy projects. That's a key factor.
Yeah, government backing. That can really light a fire under things.
Yeah.
What about Europe? How does it stack up?
Europe's holding over 30% of the global share, so still very significant. Market size for 2025, USD 53,165.88 million, and growing at 8.6% CAGR.
Okay, similar growth rate to North America overall.
Roughly, yeah, but there are some interesting differences within Europe itself.
Higher than the regional average.
Exactly, with a 2025 market size around USD 8.9 billion, and that growth seems linked to investments in green hydrogen.
Right, hydrogen made with renewables.
And carbon capture initiatives, trapping CO2. Germany, on the other hand, it's got a larger market now, about USD 10.5 billion in 2025, and an 8.8% CAGR.
So slightly slower growth than the UK, but a bigger base.
Right. And their growth seems driven more by strong industrial demand and these Power-to-X projects.
Power-to-X, refresh my memory on that.
It's basically using surplus electricity, often from renewables, to create other energy forms like synthetic fuels or chemicals. So Germany's focus there is boosting its Syngas market.
Got it. Okay, let's shift gears. Asia Pacific, APAC.
Right, APAC. Currently holds around 23% of the global market share. Their 2025 market size is estimated at USD 81,964.07 million.
So third largest region currently.
Yes, but here's the kicker. Their projected CAGR is 11.3%.
Wow.
That's the highest growth rate across all regions, by quite a margin.
That definitely signals a dynamic market. What's fueling that sort of rapid expansion in APAC?
Well, China's a huge factor, massive market size, USD 34,424.9 million in 2025, and growing fast at 10.8% CAGR.
What's driving China specifically?
A lot of it is down to extensive coal gasification projects, basically turning coal into syngas for chemicals and fuels, and just rapid industrialization generally.
Makes sense.
But India is also really significant. Its growth rate is remarkable, 13.2% CAGR.
13.2, that's flying.
It really is. A market size around USD 8.2 billion in 2025, and that's driven by, well, the needs of its huge fertilizer industry and also a growing push for sustainable energy solutions.
So industry, agriculture, energy transition. key themes in APAC. What about South America?
South America accounts for just over 5% globally. Size around USD 8.4 billion in 2025, but look at the growth. 10.5% CAGR, also very strong.
Another high-growth region. Who's leading there?
Brazil's the leader, about USD 3.6 billion market, 11.1% CAGR. That's fueled by its big agricultural sector, fertilizer demand, plus growing investment in green hydrogen.
Green hydrogen again. Seems to be popping up everywhere.
It is. And Argentina's also showing really strong growth, 11.4% CAGR, even slightly higher than Brazil's. Market size around USD 1.4 billion, driven by petrochemicals and biodiesel.
Okay. Agriculture and cleaner energy themes there, too. Let's move over to the Middle East.
Middle East holds around 2% of the global market. 2025 size is about USD 8.86 billion, growing at 11.1% CCGR.
Another region over 11% growth. Interesting.
Yeah. Saudi Arabia has the largest share there, about USD 3.1 billion, growing at 11.4%. Qatar's smaller, maybe USD 700 million, but still growing fast at 10.6%.
And for them, it's mainly driven by
natural gas.
Yeah.
There are abundant resources and the production of various derivatives from that gas. That's a core story there.
Makes sense, leveraging their strengths. Okay, finally, Africa.
Africa accounts for about 1% globally, so the smallest regional market, 2025 size around USD 4.87 billion, but still growing respectably at 10.4% CGR.
Still double-digit growth.
Exactly. South Africa has the largest market within the continent, maybe USD 1.7 billion, 11.3% CAGR. And that's partly driven by investments in coal gasification tech, similar to China in some ways.
Right. So fascinating picture, growth everywhere, but the pace, the scale, the drivers, they really vary quite a bit region by region.
Definitely.
Okay, so let's zoom out again and talk about what's actually pushing this whole global market forward. The report points to some key drivers, right?
Absolutely. And number one probably is this rising global demand for cleaner fuels and more sustainable chemicals.
The green transition.
Pretty much. As environmental awareness grows, regulations tighten. Industries are looking hard at Syngas derivatives as a way to, lower their carbon footprint. Using Syngas to make cleaner synthetic fuels is a big part of that.
Yeah, that fits the global narrative perfectly. What else is a major factor?
Well, the report also highlights increasing investments in hydrogen production and synthetic fuel tech generally.
We keep coming back to hydrogen.
Because Syngas, that mix of carbon monoxide and hydrogen, is crucial for making both hydrogen itself and various synfuels. So as those areas boom, demand for Syngas derivatives naturally grows alongside them.
Right, it's an enabler, and we touched on this with the regions, but government policies must be a big piece too.
Oh, huge. Supportive government policies, incentives, anything designed to encourage low-carbon energy solutions is a major driver.
Like subsidies, tax credits.
Exactly. Subsidies for renewables, tax credits for a clean tech adoption, regulations favoring lower emission fuels. All that helps steer investment towards Syngas-related projects.
Okay. And finally, the report mentioned the fertilizer industry's growth. How does that connect?
Yes. Ammonia. It's a key derivative made from Syngas.
Right.
And it's absolutely fundamental for making most fertilizers. With the global population growing, you need more food, which means more fertilizer, which means more ammonia, and thus more Syngas needed to produce it.
Got it. So it's like environmental pressure, new tech, government nudges, and basic industrial needs all pushing in the same direction.
That's a good summary, yeah.
Okay, let's switch focus slightly. Within this growing market, which specific bits are growing the fastest? Let's start with feedstocks, the raw materials.
Yeah. Okay, this is where you see that sustainability trend really clearly. Looking at feedstocks, the report identifies biomass waste as the fastest growing segment.
Biomass waste. So like agricultural leftovers, forestry stuff.
Exactly. Things that used to be just discarded. It's being driven hard by that push for renewable, carbon-neutral alternatives to fossil fuels.
That's a big shift, isn't it?
It is. I mean, coal is still the dominant feedstock now.
Because it's available and cheap, presumably.
Right. Availability, cost stability. But the trend, the direction of travel, is clearly towards sustainable sources like biomass.
Okay. And the technology is used to make the Syngas.
Yeah.
Anything growing particularly fast there?
Yes. In terms of production tech, biomass gasification is expanding rapidly.
Makes sense. Connects directly to the feedstock trend.
It does. Converting biomass into Syngas aligns perfectly with tackling climate change, aiming for lower carbon emissions in the process itself.
So both the what and the how are getting greener. What about the end users? Who's buying and using these Syngas derivatives at the fastest growing rate?
The report points to power generation as the end-user segment with the most rapid growth.
Power generation. Interesting. Why?
Several factors. Improvements in gas turbine efficiency turbines that can run on Syngas. Also, the potential to convert existing coal power plants to use Syngas instead.
Retrofitting coal plants.
Exactly. And then there's the growing interest in co-firing hydrogen derived from Syngas in power plants to cut carbon emissions.
Using hydrogen as part of the fuel mix.
Right.
That feels like a potentially massive shift given how much electricity relies on fossil fuels now. But it's interesting. Power gen is fastest growing, but you mentioned chemicals is currently the biggest end user market.
Precisely. Chemicals holds the largest share right now, mostly because of the huge consistent demand for methanol.
Methanol, right? Used in everything.
Yeah, it's a basic building block for so many things, plastics, adhesives, solvents, so demand is always strong. But the growth rate clearly shows that power generation is set to become much more important in the Syngas derivatives market picture going forward.
Paints a picture of a market that's not just growing, but really transforming. Now, the report also touches on the players, the competitive landscape. What's the gist there?
It's kind of a mix, really. You've got the big, established, multinational corporations.
The usual suspects.
Yeah, and they're investing heavily in like high-efficiency gasification tech, low-carbon hydrogen derivatives, that sort of thing. But alongside them, you also have smaller emerging companies.
Startups, niche players.
Exactly, often focusing on more specialized areas, especially syngas from biological sources.
So innovation is happening at both ends of the scale.
Seems like it. And the report also notes that countries with strong industrial and agricultural bases, think China, India, the U.S., Germany, are seeing more investment in Syngas infrastructure overall.
Doubling down on it.
Yeah, it shows they're serious about using Syngas derivatives for, economic growth, but also hitting their sustainability targets.
Sounds like those countries see it as pretty strategic.
Yeah.
Did the report give any specific examples of market activity?
It did mention one, yeah. Back in May 2020, Linde PS, big industrial gas company, started up a new Syngas processing plant in Louisiana,
Okay, what's it doing?
supplying carbon monoxide and hydrogen, key Syngas components, to a major chemical company there, plus other refineries and chemical plants in the area.
So a real-world example of the supply chain in action.
Exactly. Shows the investment and development is ongoing, concrete stuff happening on the ground.
Okay. Well, we have covered a lot of ground here, digging into this 2025 Syngas derivatives report. Let's try and wrap up with the main takeaways for everyone listening.
Sounds good. So takeaway one, the global Syngas derivatives market is already huge, over USD 221 billion projected for 2025.
Huge baseline.
Right. Takeaway two, strong growth expected everywhere, but APAC is really the one to watch with that highest CAGR. Potential shift in global weight happening there.
They're the drivers.
Yeah.
It's clearly that push for cleaner energy, sustainable chemicals, but also just ongoing industrial demand, right?
Absolutely. Tied into government policies and tech advances. And takeaway three, I'd say, is the dynamic shift within the market.
The fastest growing bits.
Yeah. Biomass waste as feedstock, biomass gasification tech gaining ground, showing that sustainability focus, and power generation emerging as a really key future demand driver, even if chemicals is bigger today.
Definitely a dynamic, evolving picture.
Yeah.
Shaped by green needs and industrial realities. Okay, so for our final thought, given all these regional differences, that strong trend towards sustainability, what kind of unexpected things, maybe innovations, maybe geopolitical shifts, could really shake up these projections in the next few years?
That's the multi-billion-dollar question, isn't it?
It is. And maybe more personally for you listening, what new opportunities could this create for learning, maybe for careers in this rapidly changing energy and chemicals landscape? Something to chew on, definitely.
Indeed. It's a complex space, Syngas derivatives, but constantly evolving. Lots of possibilities there for anyone interested in the future of energy and industry.